Hey everyone, it's Corey, and this is another Sims Investment Management monthly update. And we have a lot to cover. I know this update's coming out a little bit late. I hope everyone had a wonderful 4th of July celebration and weekend. It really is great to celebrate our freedom and all the many blessings that we have in this country that I think a lot of us take for granted, and sometimes they can certainly be lost in the messages that are sent to us frequently. So I hope everyone had a safe and happy 4th of July. The second quarter was absolutely fun to be a part of. And, we had the best quarter in the market that we had in several decades. In fact, actually the market off of the March low in this downturn, the swift downturn, we had the 50 best days in the market, the 50 consecutive best days in the market ever in the history of the market. And it's why it brings me to a really important point that it makes me so sad when last week I read the headline from Fidelity that said that a third of Fidelity's clients age 65 and older ended up selling completely out of equities between February 15th and the beginning of May. So this was permanent wealth destruction for these folks that decided to panic and sell out. A third, that's not a small number, especially when you consider how many billions of assets that Fidelity is custody over. And it proves and shows the fact that having a valued financial advisor can help you eliminate making some of those extremely painful and mistakes that you just can't get back. Unfortunately, those people that sold at those prices between the middle of February and the beginning part of May, they may never see those prices ever again. They may never get those deals ever again for those investments. So my heart kind of breaks for those people. This newsletter is going to include kind of a mid-year review of what our principles are. And 3 of those principles that I think are just really important to hit on are the fact that all successful investing has to have faith in the future, has to have some patience, and has to have discipline in your plan. And I think those 3 things, although they're simple to understand, they can be really difficult to execute, and especially all 3 at the same time. So I'm fortunate that I have great clients and we were able to get a lot of you through this past crisis, but there will be more, and we're not quite out of the woods yet. But that also leads me into our next point, where we're going to start getting inundated, as we have been, with all these market predictions. And it just always makes me laugh, because every year we get invited to all these type of market outlook events, and here's what the market's going to do for the next year. And if this doesn't prove to you that no one has any idea of what is going to happen in the short term, I don't know what will. And that's the beauty of the market, is the short term is unknowable. And but if we look back in history, and there's a wonderful quote by Churchill in this month's newsletter, of how much history can give us so much clarity in looking forward. Also included in this newsletter is a wonderful article that John Gordon had come out in his Monday morning newsletter on June 22nd that I thought was really appropriate for the time that we're going through right now in the country. And I wanted to include it, so I hope you get something out of it. I think it's one that you could keep and store away for use in the future. So the last part that I'm going to kind of end on here is the fact that when we look at not only the pain that was caused by this downturn and the fact that people sold at inopportune times, if we look at the forward, because I keep getting the question again, are we going to have a second drop down? Are we going to pull back again? And I remind people, 1, if it's not short-term needs for their cash, then it's irrelevant. And 2, the market is based on what company earnings are going to do, and it's not driven by sentiment over the long run. And we are now sitting on $4.8 trillion in cash in money market funds. So investors now have more money sitting on the sidelines in cash than they ever have, even more money than even was sitting on the sidelines during 2008, 2009, adjusted for inflation. And that proves to me that there is a lot of dry powder sitting on the sidelines that can propel this market higher, and more than likely will continue to propel this market higher. Maybe not in the next few months, but certainly over the next 6, 12, 18 months and even longer. So just something to keep in mind. If you have any questions on any of the topics that we went over today or included in the longer newsletter this month, please give us a call. We are doing in-person meetings again, so we've been reaching out to clients. We understand if you're not comfortable coming into the office, we can certainly make arrangements for virtual meetings as well. So I hope you stay safe, and if you need anything, you know where to find us. Thanks.